Greetings, YouTube. Today I'm going to talk about an important topic, another important topic in the strategy. So if you've mastered directional bias, then you need to know POIs and POEs. So the point of interest, basically, those are high probability zones like order blocks or breakers, fair value gaps, and support and resistance. I don't use the latter. I don't use support and resistance and fair value gaps to find my point of interest. I usually use the order blocks that turned into breaker. And these ones is where you find interest in a trend. After you've confirmed your bias, you have to find your point of interest, whereby price will come to that point and you get interested in a market or in a position. So for this particular example, I've drawn some illustrations here, and let's go straight through that. So you can see price was coming from A. Let me start with one, because one was where the daily order block was formed, and price came to A, which is the lower high, and a lower low was created, breaking through the order block, the daily order block here. So creating a lower low to create a lower high back to point B, which is the retest to the breaker, the former order block. So for the point of interest, they're usually on the big time frames, that is the daily, the weekly, and the 4 hour. Usually I take the 4 hour and the daily for my POIs. So once you find because if you master directional bias, you know price is behind a downtrend. Now with this example here, we are not in a downtrend. You can see price is making lower highs and lower lows, lower highs and lower lows, etc. So after price creating a lower low at 2, there was a shift in the market and price started going back up to B, which was our point of interest. So when you see it on the big time frame, let me say on the daily, you'll see only like four daily candlesticks back to B, and you're like, oh, this was a reversal, but you can't take a trade from there. So how do you take that trade? And that is where we go to our point of entry. Our point of entry is where the market is broken down into the smaller time frames, and that is where we find our entries to a trade, or we make our setups. So when price reached at 2, which was a lower low on the point of interest, on the smaller time frames there is a shift in the market that happens, and that was price was creating lower highs, lower lows, lower highs and lower lows. And once it created a lower high, it failed to break the previous low and rather break this high here. And that was a shift in the market which happened here. And there price starts making higher highs and higher lows. Back to our point B, which is where we're going to find our entries from. So once we get to point B here, we mark our what? We see our structure shift, because market was going up, down, and when it reached a certain point, it did create a higher high, but rather a low, and then it broke structure, which was a shift in the market, and then the retest back to the POI becomes our entry. I mean the point of entry becomes our entry to short the market, and that is what happened. That is what happened right here. So for a point of entry, you wait for a shift in the market. You wait for a shift in the market that our point of interest, which is on a big time frame, pause. This point of interest here was on the daily order block. So this is the daily order block on the big time frame. But you wait for the shift, and the shift happened once the price fails to create a new high and breaks a higher low. That becomes a shift, and the retracement or the retest back here becomes our entry. And what is missing there? The only thing that is missing is inducement. And of course, inducement can't be shown on these illustrations here, but you'll have to get some kind of inducement around these levels here. Get some kind of liquidity around those levels there to short the market. Simple as that. So the point of entry is always on the smaller time frames. It can be on the 1 hour, 45, the 30, the 15, or even the 2 hours. If you find a nice point of entry there, after breaking it down from the point of interest on the big time frame and finding a shift in the market. So this is the first setup in the trade. Excuse me. That's the first setup, the sell. And then once you've entered here, your stops are just above the high of the what? Of the point of entry. That 45-minute order block or 30-minute order block, just above that high. That is where your stops should be. And once price comes back to trigger you, it will just sell the market. It will just sell and start creating lower lows, lower highs, lower lows, lower highs, lower lows. So how do you capitalize on this move? Because remember, you want price to start selling so that you get out from these levels here at point 2. At point 2, this is a short, so your entry is here, and you want to get out at these levels here. At these levels here. So with that move, you have to capitalize any other setups you get to continue the trend. Because remember, you know your directional bias. You're in a downtrend. And this was just a retracement to continue. Yeah, so this would be a nice point to take your profits from. And you can see that the first TP is around that point there. And that would have been, remember, this is an example, an illustration. It's not a real market here. I'll give you some live examples after this. This would have been a 1 to 7. So once you get your 1 to 7, you can still catch another entry. And how do you catch another entry? The first entry happened on a shift. It happened on the market structure shift. It happened right here. But around these levels here, you can still catch another entry. Because you know your directional bias. You know you're selling the market. You know you're selling the what? You know you're selling the market. So how do you get another entry? Still, you won't get an entry because of every lower low that has been created. Oh, there's a lower low, there's an order block here, let me enter here. No, that won't work. What works is looking at the left. Remember our directional bias video? We have price creating higher highs and higher lows once it's retracing back to our point of interest. So when you look at the left, all these lows here have to be taken out, like we talked about. So once you know that, then once price takes out multiple lows, and this was this low here, and these two here, this and this. Once price has taken out those lows, then you just wait for inducement. Not one low, but either 2 or more. So the inducement will be around these levels here. Your liquidity or your inducement will be around those levels there. And once you get your liquidity and price has broken these multiple lows, the immediate point of entry would be the immediate order block or breaker before the inducement. And you can see it can either be the 1 hour 45 or even the 15:30 like I did, and you'll get another entry. You get another entry here to short the market. Because remember, your overall take profit is here at 0.2. And these two here have given you a move. Now imagine you have a big point of interest and a lower take profit. You can catch 3 or more setups with one particular one. So this is 7, 1 to 7, and this will be a 1 to 5. So you can catch a 1 to 13 if you see these kind of setups. And then doesn't mean that you have to wait for the whole number 2 to be taken out. This whole number 2 here. You can take your profit in these levels here if you can't wait for long. Sometimes it might take longer, but once you take your profit here, then maybe you can wait for another setup and enter. So that is point of entry and point of interest. That is the point of interest and point of entry. That is how you find them. It might look very complex, but it's simple once you know that you don't enter a trade on a POI, but rather a point of entry. The POI is just the interesting point whereby you're like, oh yeah, now I can find a setup. And once you get the POI, just go to the smaller time frames. A shift in the market can happen on the 15, can happen on the 45. Yeah, you train your eye to see that. Then after there, you'll get your entry, your inducement and entry. So let me give you some examples of the latest trades that I've used on this kind of topic. I think it's on gold and Bitcoin. So let me give you the gold setup. The gold setup is on I think the 4 hour, yeah, because that's a 4 hour order block. So you can see that price is coming from up this side, seeing lower lows, lower highs, lower lows, lower highs. Then it has broken this 4 hour order block here, and that eventually will become our point of what? Our point of interest. That 4 hour order block becomes our point of interest on a big time frame. And when I break it down to the 15, either the 30 or the 15, let me try and be precise with that. It's either on the 30 or the 15. That is where the entry is. This is just a continuation of network is slightly poor. Yeah, so we know we are in a downtrend, and they have broken that. They have broken the what? They have broken our point of interest, which is the 4 hour order block. So what do we expect? We expect market to come back to the immediate point of entry. And that immediate point of entry was this 15 minute. It was this 15 minute order block here. You break down the market to see this, to catch this. Yeah, so this is a continuation. It's a continuation. The major structure shifts happen up this side. So the continuation has given us what? It has given us multiple breaks. It has given us multiple breaks. We have this low here, we have this, and this is where we are aiming to take our profit from, that low there. So once we have taken those out, and we have inducement just here, close to our point of entry, inducement right there, then automatically the market will come to trigger you in, and you set and forget until price comes to take out your take profit. Yeah, so the other example is on Bitcoin. This was a continuation example of multiple breaks of structure. Multiple breaks. The POI was on the 4 hour. It was a 4 hour order block that was broken to become a breaker. We have inducement on the 15 and an order block. And price has come back to trigger price to continue with the shorts. So this is a 1 to 8, close to a 1 to 8, 1 to 9 trade. The Bitcoin setup, we have a daily order block there, and with that daily order block, price did what? Almost broke through it and entered the fair value gap. I don't trade the fair value gap, but it was the last point of interest on this particular leg here. The last point of interest was, if price hadn't reversed on the daily order block, then it will target the what? It would be targeting the fair value gap. So to break it down, we got a shift in the market on the smaller time frames. You can see on the 1 hour it immediately shows. The 1 hour it shows price was going up. Created a low, and instead of creating a higher high, it stopped somewhere there and did what? And broke this. And that becomes a shift that happened here. Price was going up, created a low. Instead of continuing, it broke this structure there. So we know the inducement. Now it gets tricky because on the 1 hour there is no order block, but you can see the shift happening on the 1 hour because usually I use the line chart. And on the 45 you can see still inducement is there, the shift shows, but there is no order block there. So let's go to the 30 and check it out still. Let's go to the chart 30 and check it out. Something on the 30, there is no order block to trigger our inducement, so that we get the shorts. And on the 15, this is where it gets more interesting. And there you go, on the 5 minutes you can see it in real time that it was just slightly below inducement, slightly above, sorry. There we have inducement there, and this becomes our order block on the 5. And look at what price did. Price just tapped into that, stops above, Price just tapped into that and dropped for 1 to 15. Unrealistic what? Unrealistic risk to reward, right? But it's possible. Very, very possible. So that was a trade. Yeah. So that's basically it on the point of interest and point of entry. Points to remember is the point of interest is on a big time frames, the 4 hour, the daily or the weekly, and the point of entry is on the smaller time frames, 2 hour, 1 hour, 45, 30, 15, or even the 5 like you just saw on the Bitcoin setup. So the next time, I think that my next video is going to be on liquidity, and then I'll put everything all together and I wrap up this playlist. I wrap up this playlist on the strategy. I won't be talking about it again. I'll just be doing breakdowns. So subscribe for more. Peace.